Hello once again, everybody. Thanks for joining us. This is the support webinar for Thursday for high percent trading. And we were asked to go ahead and show the combination setups here today using the OP and the right edge. At least the right edge when we're making new lows or making new highs. So I'm going to show that. And of course, the two are totally independent of each other, but it's a good way to trade in combination. So I'm going to cycle through a lot of different contracts here so we can get the feel for it. Now, this is 6E, and this is, of course, for the currencies, I normally like to use the European Open session. That's midnight Pacific. So I don't have the exact OP. I mean, in order for me to do that, I have to cycle all the way to the right here, but I can pretty much tell within maybe a tick, and it's not going to matter here, that it's right about here. All right, so coming out of the European session open, there was only one trade here, and that was short through the bottom of this band. All right, now if the market had moved back up, because we touched the bottom of the band, or in this case, of course, we entered short, or would have entered short because it broke the bottom, then your stop and reverse point would be a close above the OP. But this market never looked back. It just broke sharply to the downside. A lot of ticks could have been made on this if you put it in your pocket and held a runner. And that, of course, that's the real utility of trading the OP. And I think, if I'm not mistaken, if we cycle all the way back here, I don't think it ever came up there again. No, it didn't. It never came up to the OP. So this is one instance of just one trade for a large amount. And you've heard me say many times that just trading the OP by itself results in a fairly small amount of trades, but the reward to risk is very high on those trades. Now, trading in conjunction with that, what I was showing earlier as well, is when the market is making new lows or new highs, and in this case it's new lows, and the way you can tell that is every time there's a red line on here, because where it says show plots, that's checked, and so it's not only going to show the bands, but it's going to show the high or lows as the sessions are made. So every time we broke below the red line here, that's a new session low. And so what you're looking for initially is, as you make a new session low, you're waiting for price to rally back up into the right edge box. Okay, so as we came through, we didn't get to the right edge box here. We did get to it here. So if this was your trade entry right here, short, the conservative way is to place a stop one tick above the midpoint of the right edge box. All right, and I'll show an instance where when it penetrates deeper, then you want to have a different stop. Okay, but in this case, all we did is come right up to the bottom of the right edge box, close down. We didn't have much momentum. If your stop was up here, it got taken out. And this is extremely important. You have to use the bite out of the apple in your trading. And that tenet is very important, no matter really what type of entries you're using. Okay, the bite out of the apple is extremely important on retrace trades, on phantom trades, on octopus trades with arrows. The second bite out of the apples makes or breaks most trades. And of course, using the bite out of the apple for the OP, well, of course, we're using the top and bottom of the OP plus the OP itself for that. So that kind of takes care of it by itself. But when it comes to these retrace trades, you have to follow that. So again, what we did, you got short the second time, we broke. That was a nice trade. We went band to band. All right, and that was your trade entry. We made a new low. So we came up into the right edge box again. All right, and this time we did actually penetrate the middle and then reverse, so that was your initial trade, enough to get a scalp. Again, the conservative stop would be a tick above the top of the right edge box. In other words, when we come this deep up into it and we actually penetrate the mid point of the right edge box and then fail, the stop is a good stop here. So you got a scalp, but no runner. And notice as we came up, we took out the top of the box, so you would have got stopped out. And here's where your second bite out of the apple comes in. Okay, you're looking to take the next reversal bar, second bite out of the apple, and that was it right here. All right, so you're back on this trade, heading down, making new lows again, and again looking for the same type of approach. You're looking for the same approach in here. We did not get to the right edge box here. We didn't get to it here or here or here. We did. So up we go. This was your confirming trade, confirming bar right here. Short, enough for a scalp. Your stop now would be right above here. You came up, took the stop out, bite out of the apple, and that's it. Okay. What it doesn't do is not going to continue to trade in here or anywhere in here because we're not satisfying the criteria. Those are separate, different, independent trades, right? Those trades are independent. Those could be deeper retrace trades. It could be any other type of trades that we have, but for the purposes of what we're showing here, there are no trades. And the reason there are no trades after that is we're not making new lows or new highs until here. Right here, we started making new session lows again. All right, so because of that, you're back on looking for the same thing. We pull down, we move up into the right edge box. You get your trigger because we were above the mid part of the box. You can see the line. Our stop would have been here. This is a good trade to the downside. All right, another nice trade. Made new lows, came up. Keep coming up until you got your confirmed short, which was here. This trade didn't work. You got stopped out, and that was the end of it. We're not looking at taking any more trades using this method. Okay, notice, I mean, you had a series of trades into the right edge boxes here, but we're not making new session highs. And of course, the way you can tell that is you'd have to see the blue line, and there is no blue line. We're not making any session lows in here either. So we're just kind of in a sideways pattern, and then eventually we do start, again, we made a session low right here. All right, so here was our session low. You came up, your initial trade would have been here short. Okay, you could have placed your stop right above here. You got stopped out. Your reentry trade was right here. Now this is the tough aspect of it, all right, and that was your second bite out of the apple here. As markets will do from time to time, they actually took this trade out as well. And so unless you're in a real aggressive trader to come back the third time, that would have been your entry. But if you're following the rules, you were basically done at this point. You had your one entry, you had your second bite out of the apple, and then you got stopped out. So not every trade works out, but if you look at the giant scheme of things here, just a really good amount of profits following the rules. And yes, eventually you got stopped out. I don't know what happened here, why that happened. But eventually you got stopped out. All right, came down and made another new low. That was here. So again, following that format, you would have had an entry here. Your stop would have been above here. You eventually got your stop above here. This was your bite out of the apple, and then you were done again. Okay. And I don't think, yeah, there were more setups then as we continued to move lower. We broke with a new low. So you're back in. a nice trade here short. We continue to make new lows, coming down, came up. This was your trade right here, short, at least enough for a scalp. And if you're coming back for the second bite out of the apple, you would have had a trade entry here that didn't work out, and now we're done. And of course, now this was a news report that came out right here. That was Draghi speaking. But notice, again, we're not making any session highs or session lows in here the rest of the way. Okay, and as we speak and as we sit here right now, we're still not making session highs or session lows. We'd have to take this out to make a session low. So any questions on that? You can see you're not going to get every trade. The nice thing about this is you can follow multiple markets and you can wait on these setups. Again, showing how to trade the OP and then how to trade the into the right edge box for new session lows or new session highs. It's very selective. You're not going to be over trading. You're not going to be taking a series of trades that don't work. And by and large, every day is pretty much a profitable day. Let's just cycle through a couple other currencies. Some of you trade different currencies. I'm going to go ahead and put the 6A up here. If anybody wants to see another market, let me know, and I'll be happy to put that up. But I just want to show a couple other currencies because, again, you can trade these if you're trading the European session, and I know a lot of you do because a lot of you either are up at that time or over here in Europe. All right, here was our, let me get the OP on this. Okay, here's our OP, 75.93. All right, so again, coming out of the gate in the European session, it was a short entry, and that was it. You rode this down. Could have ridden this way. I think it's gone at least 6 bands here, or very close to six bands down. It was predicted to be compressed, and we actually went into expanded, but that was your one trade again on 6A, a really big reward to risk. So let's then analyze our other setups. We're coming down, making new lows. All right, coming into the right edge box. This would have been your trade entry here. Your stop would have been right here. You got stopped out. You got your second bite out of the apple, and that trade worked out nicely and then continued to make new lows. Had a new low here, came back up into the right edge box, failed for a nice trade. Made a new low again, came into the right edge box. That would have been your entry. This could have been your stop right here. It got taken out. Second bite out of the apple, back in the trade. Learn to try to handle this, okay? Because not every trade is going to be pure and clean, but this is a bit of a problem, and if you can learn to master this, don't give up on the trade. Remember, your stop is relatively very small, so what am I talking about? We came up, you had your initial trade, you got stopped out. This was the bite out of the apple. Now, the bite out of the apple in here made a nice scalp, but it didn't get the runner because it came back up and nailed it by 1 tick. All right. If you can learn to master this, what is your risk at this point? If you get taken out by 1 tick and you immediately reverse, you know, a good professional trader will put this on one more time. And the reason for that is we're going with the trend. So the trend is our friend. We're trading with that. Okay, the momentum is down. All we did is just tick this box. All they did is took us out by 1 tick, because remember the markets are extremely efficient when it comes to stop hunting. And they took it out, put it back on again one more time. That's extremely important. The most you can lose here is about 4 ticks on this, if you're wrong, and then you're done. So we came down, made new lows, and again, it was the same thing here. Short, stop is here, get back in again on the bite out of the apple, and then what? One more time, it just got taken out by a tiny bit, and then back in it again. Some markets will do that more than others. Okay. Give me a second here. I just need to excuse myself for about 30 seconds here. I'm still kind of battling the remnants of a cold, and I'll be right back. All right, let's move on to different market. Remember, we're looking now, we looked at the European session open. Now let's go to a 5:30 a.m. open. All right, you can use the 5:30 a.m. open if you've got a major report, or in the case of gold, I like to use 5:30 for gold. So let me pull up the gold chart. I think I have it here. Yeah, here's the gold chart here. All right, so here's our 5:30 open. Here's our OP right here. Okay, so the way we like to trade it, we're coming down, we close below the band, we're going to be short. All right, we've gone already to the, let me blow this up a little bit, we can see it a little bit better. We've already gone below the band, so that means on a close above it, we're going to flip it to long, and that's the long flip right here. Notice the stop isn't that big. I mean, the OP here was 1239.50. The top of this band is 1239.90. That's 4 ticks. If you tack on 2 more for some cushion and slippage, you're looking at a 6-tick risk, basically, on a contract. And that's pretty darn small. But anyway, it was long through here. As we came back down through again, it was short, right? Because we touched the bottom. On a close above here would be long again. We didn't get the close. It traded up, but didn't close, so it's still good. And then as we came up to the upside, it closed above it, and we flipped to long. And notice this is just the first 45 minutes from 5:30 on. That was the first 45 minutes, and then we went up and made a very nice trade. When we were in the room this morning, I commented when gold came down to its OP. I said if we close above it, it's going to be a short. If we close back above it, it's going to be long, and that's what it was. It was a long trade. You got the long trade to the upside. We came down again into here, didn't close below, closed back above it long. All right, and then this was a little bit of a whipsaw here. Short, flipping to long, and then back to short. All right, so again, producing very nice trades. And that's how you trade the 5:30. So every one of these are independent. We showed how to do the midnight one, or we call it the midnight one, the European Open. This is the 5:30. All right, now let's take a look at our right edge setups. I'm going to go ahead and suppress the bands. And I think, there we go. Okay. So now let's look at the other analysis, new session highs versus new session lows. Okay, we made a new session high here. So what are we looking for? We're looking for a retrace back into the right edge box right here. That's your entry. Okay, made a new session high. Let me try to expand this so we can see it a little bit more. Let me get my bearings here. Okay. We made a new session high, so back in again, long. You can place your stop right under here. It got stopped out. You're on the bite out of the apple, back in right here, and notice we did not close below the bottom of the right edge box. So the right edge boxes are very important because not only will they give you levels that you can expect the markets to turn, but they give you important levels that you can base your stops on as well. Okay, so we came down to it and turned, made a new high here. All right, new high. So we came back down into it, reversed up. Your stop would have been under here. We didn't get to that, and we rechecked the high. Now this is a recheck, and when you recheck the high, just like the first time into the Phantom, we're not looking at this setup anymore. Okay, you have to make a new high in order for this setup to occur. We didn't. All we did was check it, and that was it. So none of these are trade setups in here. Even though a lot of them worked, okay, none of them are trade setups in gold. Notice we're not making new session lows because in order to do that, our session low from earlier was way over here. Okay, so in order for that to happen, we've got to take that out. So none of these trade setups that are occurring in here are any type of a trade setup that we're looking at trading. Finally, we made the new session low here. We came down, came up, got your reversal. That was your short, and it didn't look back until a little bit later. That was right here. Short entry. If your stop was here, you got stopped out. You were back in on the bite out of the apple, and that was it. Now this is that aggressive second time trade that I showed you, and look where we're at again. We're right here at the OP. Okay, right here at the OP. So from a trade standpoint, a close above here is a long if you're trading the OP. I didn't really comment that much on it because I was concentrating more here on the right edge. But it's the same principle again, back to the OP. Now that's the 530 pit open. You can use the same thing for natural gas. I think I showed nat gas this morning. Let me suppress some of the profile here so we don't have to see it. Okay. So nat gas, I also like to use a 530, that's specific, a 530 open time. The 530 open time was this, all right? And you can see this is a very small OP range. Let me scroll over and get it. Our OP was 1945. I think it was like 2 ticks on either side. Okay, very small risk associated on these trades. So coming out, you closed below, you would have been short. It didn't go anywhere. You reversed back to long here, and you caught the nice trade. This put us into our inventory report. Okay, so up till now you had 2 bands of profit, but then we had our inventory report. So there really wasn't anything to do in here. As nice as this trade looks, there's no way you could have gotten this trade. Notice all the shotgunning that occurred was from here all the way out. Okay, so there's nothing you really could have done here until you waited at least 2 minutes out to here. All right. If you were holding through the report, and you know, nat gas trading as low as it is right now is not as volatile shotgun wise now when these inventory reports come out like it used to be. You know, before it used to move 80 or 90 ticks. Now it's a lot less active because of its price. Okay, so it's possible you may have been able to hold it through here, but that would be pretty difficult for most traders. But let's take a look at the right edge setup then on it. All right, applying the same rationale. I need to put the right edge up on it. And again, the one I always like to use, if you're going to use this, is the HB2 right edge 1. That's the original right edge. That's the one we want to use. Okay, that's the one that you can control, turn things on, turn things off. All right, so we've got it up here. I'm going to suppress this a little bit more. I don't want to see the exit boxes right now. I don't want to see the bands. All right, so we're going to get rid of that. All right, so let's take a look at our analysis. We get to 732. All right, so now we're able to trade. We're making new session highs. We're looking for our right edge setup. We came down. That was your trade. Your stop is here. We got stopped out. We reversed back up. That was your bite out of the apple here. And here's that little second one that I'm talking about. okay? This is the one that frustrates most traders because you got your second bite out of the apple here, and this is what I call the frustration stop. They just get you by one tick and turn it, and off it goes, okay? So if you can learn to master this one, and again, the stop is not that big. You're looking at 3 ticks maybe, 4 max on the trade. 3 ticks or 4 ticks isn't going to hurt you on a trade based on the reward to risk ratio that you've got. Now, it didn't make a new high until over here, right? Didn't get down to the box. We continued to make new highs. We did get down to the box here. That was your trade, and that's where we're at, okay? And so again, what I'm showing, this works on any market. You can put nat gas up here. You can put gold. You can trade the copper market, the silver market, the grains. All of it works because these indicators have been time tested. This right edge has been out now about, what, 4 years maybe? It hasn't changed. But the key is, if you're going to do this, remember, just again, everybody, in your data series, all right, the data series you want is 12 days to load, okay? 12 days is important for the big band indicator and for the right edge indicator. You have to have that history because it's looking at thousands of calculations in here. More than that, tens of thousands. You need to have that history, all right? So that's the 5:30 open. Now let's just show an equity for the 6:30 pit open. Anybody have a suggestion on what market you want me to put up here for an equity? Somebody give me one, and I'll put it up for our analysis. Okay, let's look at Nasdaq. I'm going to see okay. Here's our Nasdaq. Here's our 6:30 pit open. What am I using for that? Okay, that one's pretty easy because a lot of these are pre-made. This is the CME US Index Futures RTH. That's the one for me that starts at 6:30. Okay, now let me suppress some of this. First of all, I won't even show the right edge right now. Let me suppress it. Okay. I know this is the OP because I set it in here earlier. All right, so coming out of the gate, you had a short trade. You got a scalp, but that was it. Coming back out, you're long here. Your stop would have been under here for a close. We didn't get there. Okay, so you're still in it long. We were coming from above. Now, a close below here would be short, and if you got caught right here on this, all right, if that was your stop and you got short, all right, then you have to reverse back up here. As I pointed out, if you're nimble enough and you have time, when you do get a trade like this short and it fails immediately, go back to your next little swing high, which was in this case here. You can flip it and put it back on. But even if you weren't quick enough to do that, you were back long here. All right, as we go long, resulting in a nice profit. Then what? Then we came down, we got short here, right? We hit the bottom here. Your stop and reverse would be on a close right here on a close. A little technique that you can use, notice on a close it would be here, but also you had a very tiny resistance area here. So you could actually use one tick above here if you wanted to, and I think I did comment on this in the room today. I said this could be your stop and reverse area here if you were trading this method, all right? And what did it do? It went down, broke nicely to the downside, all right? And that's the way basically you stayed until you closed above here. Once we closed above here and we hit this, then here would be your stop and reverse. So you got a nice trade to the upside, came down, got your stop and reverse, hit the bottom, continued lower, so your stop and reverse would be one tick above here now. And then that market broke nicely for a nice big reward to risk trade. I don't think it ever looked back again. I don't know, I don't remember. Let's look. No. Okay, so that's that. That's how you trade the OP. And again, how many markets have I shown now? My guess is what, maybe 5? We did 2 currencies, we did gold, we did nat gas, and we did this. So 5 markets. And I'll ask the question, trading the OP the way we're talking about it, were all of those markets profitable trading today? If you follow this approach, were all of those markets profitable trading today? And yes, of course. And some of them had very, very large profits, very, very large reward to risk. Okay. For some of you, I know you like trading this way. Others, if it doesn't interest you, that's fine too, because there's a number of other things to use here in your trading. You've got all the octopus setups, you have everything else. You don't have to trade this way if you don't want. Okay. But I'm just pointing out what works very, very well. Now let's look at the right edge, high-low scenario. So without even turning it on, what you're basically going to be looking at here is these where you're going to be looking at short trades, and then as we started making new highs, long trades, and then as we started breaking down again, short trades. All right, so that's what you'd be looking at initially in here. So we'll go ahead and turn it on. Okay. So we broke down. We came up into here and we reversed. All right, we got a reversal. May or may not had enough for a scalp. I can see 5, potentially 6 ticks. 6 would have been hard pressed. Your stop was right above here. We came up, hit the stop, got back in one more time on the reversal bar on the bite out of the apple. That's the bite out of the apple. Even though we got a new high, that's still the bite out of the apple. All right, so that might be a little bit confusing for everybody, but what did we have? We made a new low. We had our entry. We had our stop. We had our bite out of the apple. Even though we're making new highs, that still was the bite out of the apple. Now notice, because even though we're making new highs, we don't have any right edge boxes here to trade. We don't have any green boxes because our overall trend is down. Okay, our overall trend based on the dynamic trend is down. So we're not taking any more short trades in here using this approach, all right, because we're making new highs, but we're not taking any longs either, even though we're making new highs, because we don't have any green boxes. I can pretty much guarantee you, I'm going to turn on the dynamic trend. This was, I can tell, a phantom trade up here, or very, very close to a phantom trade. If I turn on the MM, yeah, this was your phantom right up here. Okay, that was your phantom. Let me turn it back off. All right, so we've analyzed the OP, and now what do we have? We made a new low on the session right here, new low. So we're cleared to go on the right edge. We came up, got your reversal, you got a nice trade. We made a new session low again, all right? Came up into the right edge, got your reversal, that's your trade, okay? Now all we did was check it, so we're not looking at taking any more of these short trades in here because all we did was check it, all right? And we checked it again. So none of these are short trades. None of these qualify for short trades using this approach. And that's why I say you can follow multiple markets like this, because it's going to filter out a lot of what I'm going to call the noise using this approach. Okay. Now notice we had a change in the dynamic trend, and we had our green right edge boxes, but we're not making new session highs, right? In order to make new session highs, we had to take this out. So you're not going to be trading in sideways chop. This method, you're going to be trading with a good trend, either up or down, always with the trend. All right, you're never really going to get caught in a sideways move. So all of this is just, once we had this trade here, the rest of this from here all the way over to here is just noise. Okay, notice you could still trade the OP. You still have your OP trades, long and short. Okay, but all of this noise are not trades. As we came down again, we made new lows. So we're back on this again. Okay, back on it. Your entry could have been here. Your stop would have been here. We didn't get to the stop and we broke. All right, we made new lows again. Came up, just touched it. You could have had your entry here. Continue to make new lows. Your entry was here. Your stop could have been here. And then as we came up, this is what? This is the bite out of the apple. Bite out of the apple, short. Came down making new lows again. This is your first entry. This would have been your stop. This was the bite out of the apple. Okay, bite out of the apple. And now I started a comment as well. What was happening was, I said we seem to be hitting the first box and then just going through the top a little bit, and that's what happened. All right. This is that third trade again that I talked about. And this is entry one. This is the bite out of the apple, and this is what I would call the unfortunate tick. I don't know, for lack of a better term, I'll just call it the unfortunate tick. This is the unfortunate tick trade where they're stop hunting. They just get your stop and then they turn it. Okay. Didn't make a new session low until here again. Where's the trade? We're coming up. We're waiting for a confirmed reversal bar. Waiting for a confirmed reversal bar. It was right here. So you're short. This was an extreme move up. I had commented on that in the room. This is an extreme, a linear move. I said this is a strong linear move, but that was your trade. We came down, made new lows. New lows again. That's your trade entry. New lows again. That's your trade entry. This is your bite out of the apple, and this is your unfortunate tick if you wanted it. After that, we're just sideways, no noise. Okay, made a new low, came up, reversed. That's your entry. You got a nice trade. Took out the stop to the upside. Here's your bite out of the apple, and that's it. You're done. Okay, now we're just all sideways chop, nothing going on. Nothing going on until here. New session low. Right edge setup here. Okay, and as we speak, you're getting a right edge setup again because we're coming off the lows as we speak. Okay, any questions on this? That's what I wanted to show. We've had a pretty good time session here, but is there anybody who doesn't understand this concept? Or what are your comments, suggestions, or observations based on this? And I'll just hold for a minute. Some very good feedback. And again, the key to remember, if you're going to trade this or any other approach, you have to have the bite out of the apple, and you have to do, if you can master it, the unfortunate tick. That's what I'm going to call it from now on. That little head fake, let's squeeze the stop. That's called the unfortunate tick entry. So that's what we'll call it from now on, unless somebody has a better, well, probably a better term would be the foo-bar, but I don't want to do that, right? That would be the foo-bar entry, but we'll call it the unfortunate tick. I don't want to call it the foo-bar. All right, any final questions? We're going to wrap this up. I will go ahead and post this. Any final questions? No? Okay. So again, notice this was your entry as we spoke. Your entry was here on the short. Your stop can be right above, one tick right above the mid part. If it gets taken out, you're looking at one more bite out of the apple and potentially the unfortunate entry, the unfortunate tick. All right, well, that'll do it. Okay, so we'll see everybody tomorrow, bright and early. Tomorrow's Friday. Remember, on Friday we want to be a little quicker to take profits on Friday. So thanks for coming, and I'm going to get this posted up, and we'll see everybody tomorrow. Have a good day. Enjoy the rest of the day. Try to do something nice and constructive, and we'll see everybody tomorrow. Okay, bye now. Bye, everyone. Bye-bye.